No, I am drinking it right now. So
Look at
you
you.
have about 30 minutes with me.
All good. Um, so our buddy Jesse is joining. Let me just pop this up. Morning, guys, girls. What's happening? Um, just gonna kick this off. Hopefully, I'm gonna try and get this a little bit quicker because I know we have. Well, it seems that we have a pretty good morning trading session right now. Actually, let me do this. Um, so if you're new to this or if you're just joining, really all this is it's well, I say all this is it's probably like the most important thing, and I'm just speaking for myself. When you trade for a living, you really need to approach the majority of everything you do as a business because it is your business, and so this is really the way that I was taught and how I currently approach my trading week, and every trade within that week is pretty much planned out. And what we'll do today and every Monday, just around noontime, which is typically when the volume starts to die out, is just kind of go over what was anything breaking news, headlines, anything that you guys want to talk about or take a look at. Send in the chats. I have a handful of major headlines that have really kind of just hit my radar. There are a couple things that I'm not going to have too. So again, if you throw them in the chat, by all means, we'll take a look at them, and we'll go from there. So before we get started, I do have to point out that we are an options trading group, and options are not for everyone. So if you haven't traded options or you're new to this, please call 1-888-OPTIONS and get a copy of characteristics and risks of standardized options. So that said, be weary. A couple headlines. And again, this morning was a very nice, clean reversal. So I know a lot of us were trading, including myself. So you don't have a whole lot of stuff here. But essentially, what we're going to look at right now, it's all about inflation. So it's still about inflation. Most of earnings season is actually behind us at this point. So what we do have, sorry, I'm trying to get centered. What we do have coming up this week is actually retail earnings. So I'm looking at things like Walmart, Target, those general areas will have some catalysts. Be careful. Walmart will report before Target, and it will typically move Target with it. So if you're going to be in any trades, we'll take a look at those kind of things before we get started. Most of the headlines is really about, I saw a lot about housing. Jesse, did you catch anything that was kind of like new that might have caught your eye in terms of like a macro perspective?
I don't remember when it was, but First of all, can you hear me in there? Just a test.
I can hear you. They should be able
Okay.
to hear you.
Yeah, I don't remember when it was, but the housing. So tomorrow we have housing starts, as you said, but I think last month we had better, like more houses being built, and
Right.
the demand and supply is evening out,
Yep.
versus before we had a lot more demand than supply. So prices are going down, which is good because interest rates will hopefully follow as that goes and strengthen the economy that way.
Right. So this was really the headline, right? That I caught. So builders stuck with too many houses and interest rates are going up. Here's the actual article. It's like Bloomberg Law.
Hmm.
Um, but essentially what they're saying is that we know we're in a really weird situation. Housing prices, things like that, are part of our inflation data points that everybody tracks. So it's tough, right? The builders have built houses and now they have to sell them, but interest rates are high, so not a lot of people want to really take that on. I think we've been talking about it for quite a while. We're like, in real life, not the market, by the way, but just in real life, cash is probably going to be king. Uh, a lot of times these kind of situations will happen, and what you'll see is, you know, prices of the houses, they're not really coming down just yet. I don't see them coming down, at least not in my area. But the buyers are really going to be cash heavy, so it's going to be hard to take on a high interest rate loan, or what you might consider as high interest, compared to what we've been having for quite a while. So it's just gonna, yeah, evening out, I think is probably a good way to say it. So not expecting a whole lot there, but it's something that's going to be potentially market moving. Also, jobless claims, things like that. The biggest thing that did move markets last week, that was, as we know, right, that was going to be the biggest thing. So all week, the back half of last week, it was going to be more or less make or break. We're sitting at a pretty key level for the indices, and we did move higher. So Wednesday we got core CPI, or the inflation rate, and actually came in a little bit low. So remember, when you look at these data points, and I'm gonna flip over to the actual economic calendar instead of these slides in a little bit. When we look at the data points, what moves markets is not what the current is compared to the previous. The only thing that really moves a market is where we came in versus consensus. So again, if you're looking at earnings and things like that, maybe you hold some companies that are reporting, and you're like, oh, they beat and they raised, but the stock went down. Well, that doesn't actually matter that much. So the market is forward looking. The bottoms will hit before the actual economy bottoms out. So that's what's true. So in terms of the economy, yeah, we might not be at bottom, who knows, but the stock market will bottom before real life actually does. So to that end, so consensus, it was 6.9. It actually came in a little bit lower. This is for the year over year core inflation. So remember, there's core inflation, and then this calls it inflation rate, but it's also called the headline number. And the headline number includes gas, rent, food, like all the kind of stuff that we're spending the majority of our money on. But they remove it from the core inflation rate, because they say, well, it's too volatile, which, it is whatever. Again, so we're looking really, the month over month number to me is the more important one. The year over year, I think it's gonna move based on month over month. So the surprising thing, when it came to the monthly number, it was like 0.2% consensus, and actually came in significantly, well, not, it came in lower, which is wild. And this is the headline number, so total inflation, as did the core inflation month over month number. So that the market would kind of see that as, okay, well, this is two in a row. We have had, I believe, two CPI numbers in the past that did go lower, but they didn't stay lower. The one thing that we didn't have that we did get this time was PPI. And PPI being the producer price index, so producer inflation rate, what are producers receiving in terms of their inflation, and that they will therefore potentially pass down to the consumers. That hadn't been two negatives in a row, or two drops in a row, and that was significantly lower than the consensus. So consensus on the producer side was actually 0.2% and came in at negative 0.5%. So that's kind of like the, all clear, the market took it as the all clear on the inflation front, meaning we have hit peak inflation and we should just be stabilizing slowly to the downside from here, which might be why we have a seemingly bottom that could potentially be in. I think that's pretty much it for this. There's a couple things. So consumer sentiment came in again higher than consensus, so that was good. Our Friday close was super strong, very very strong. And then just to look at what we don't have, we had 1,500 companies 2 weeks ago reporting. Sorry, we skipped last week. Last week had about 1,200 companies reporting earnings. This week it's way lower. So most of earnings season has come down. So I'm just counting. It's like 253, about 400 companies in total reporting earnings this week. So peak earnings is now behind us. Really, what we're going to start moving forward to is likely the balance sheet reduction stuff. And we have a big week ahead of us. So I'll just, move on from here. So this week we do have 3 major Dow components reporting: Home Depot, Walmart, and Cisco this week. We've had so far 24 of the 30 report. And you can kind of tell, like this looks like peak earnings. But again, we've been fighting so much other stuff. You know what I say is that there's a lot of good from an investment perspective. There are a lot of good options that you can still pick up out there that have not bounced off the lows, right? I was just looking at like J&J the other day. I haven't even looked at it today. And I'll pull up a chart in a little bit. But yeah, I was looking at that thing. That thing looks like it's not really a trader, but from an investment perspective, there are a lot of things out there that are just barely off the bottom. Yeah, J&J doing 165. I kind of like nibbling at this for like a longer term perspective. So I think we did recap here. All right, cool. I'm just going to hop out of this and jump right into the charts. So typically when I do my my initial weekly analysis, I'm going to use a 30-minute chart. So that's what we're going to look at right here. These orange boxes on my screen, this is an average week's range. And I'll typically start right where we opened on Monday, or this morning. So 420, where did we open? Let's see. The actual open, 423, give or take. We opened for the Stratters. It was like a fake out 2 down. I love that. And then immediate gap fill, right back to the upside. So careful, shooting quickly. That's all I can say there. So what I want to do, I want to mark a couple things. So what's important too is that when you see these charts and everything, and this is August 10th, that I'm looking at a giant candle that's just jumping out at me right here. August 10th, right here. Let's see. I want to make this 50. I need to see that. I'd like to see that a little bit more. So what happened this day? This was our CPI print. So this is going to be a fundamental event that's going to create a technical level to me for sure. And that looks like about did that opened? This is pre-market, about 413 that they just went crazy and then pressed right up against 418. So I'm actually going to take this 418 level right here, which I seem to already have marked out. Oh, yeah, which was also the consolidation high for May to June. So that's the top of this consolidation here. And here's what I'll say. No matter what's happening in the market from a, macro or whatever my personal opinion might be, what's true and cannot be argued here is that as long as the indices are above, as long as SPY is above 417, give or take, I'm just going to tag this wick and we'll call it 418 just for good measure.
Yep.
Right there. It's not going lower. So I had a couple people, you could take a look at like insurance and stuff like that from a long-term perspective, but I would be very cautious putting anything on. I know the VIX is very low right now, so insurance or like SPY puts, longer-term puts, things like that, they are cheaper, but it's a time thing. So you got to wait you really want to wait till you see a lower high, or yeah, a lower high and a lower low in this very short term structure, which we don't have. And to be honest, like what I would probably do, what I'm going to do, I was taking this 418 level, and this is again, you know, technicals get thrown out the window when fundamentals change. That's just something that is important to understand. And these type of moments change fundamentals. So everything gets kind of repriced. All these prior technical levels, they don't matter nearly as much, or your trends, things like that. But this clearly changed the fundamental story of the S&P 500. So um, as long as it's above that, I would say, you know, debit spreads, things like that are going to be totally fine. You know, there's a lot of things that are this is the indices, right? Indices hit low. I mean, June 14th. Um, there are a lot of charts that are near these lows that aren't the S&P. And if we do believe that a somewhat bottom has actually been put in, those are the things, good companies that have nothing wrong with them, that just haven't bounced off the bottom. Those are going to be your better bets in terms of investment profiles, if that makes sense. So all I did this time is I'm just going to take, I'm taking this. So this is clearly, we can see, you know what? I'm going to get super specific. This single candle right here. So this is all pre-market movement. But right here, this low, this is, yeah, 417, 418.50. I'll do two of these. They stepped in clearly pre-market, 412. Again, right out of the gate, 417.50. And right towards the end of the day, on strength, look at that volume, on strength at 418.50. So in between these two lines, that's going to be kind of like the low end of the week to me. If we chop around, what I will say too is that, you know, we need to be super cautious. Here's this move that we just went through. I'm just going to do a box, right? So from June lows to now, we've moved 18%, right? That's a lot to move in a short period of time. We have a 200-day moving average that we're coming right up against, and we're coming into this pretty key level, 429, which was prior resistance right in here. So it's not going to be an easy week. That's what I'll say. It looks like it looks pretty choppy to me so far, but it's going to be like, I've been saying, like melt up, like a slow grind to the upside. Like this is a chop up, sometimes gappy, right? But most of these dips, what you can see is that they're being bought up every time there's a dip. The dip, buy, right? Open, this is a big gap to the upside. Dipped, didn't even get below the day before's low. And then, boom, they stepped in again. Actually, this might be 420. Do you have a level at 420, Jesse?
Uh, on ES, 4200 is exactly similar to what you have
Yeah,
on SPY, and that's like where we consolidated probably before CPI or something last week, and then also where we consolidated before. Like you said earlier, if we're over that point, there's no reason to really be bearish on the market. That's
yeah.
where I'm starting to load up some longer term stuff here too. But yes, 4200 on ES. Let me see what I have on SPY.
Yeah. So check this out. This was a FOMC rate decision, the first 75 basis point one. That
Yeah,
4200, very interesting. It was like 48, 418 and change. Look at
yeah.
the reaction right off that level. So again, another fundamental event that creates a technical level. I have confluence across the board on, meaning confluence like multiple ways to look at this that are saying the same thing. So this, 420, 418 level, should act as support. Do we test it this week? Who knows? But if we do, in a short term, I'm still not going to be looking to the downside below that. That said, if we do break below 418, okay, 413, and then 407, and, we still have our big dip buys, but that's quite a ways away from here, to be fair. So at this point, I probably wouldn't be going with the big targets. we should do this too. I know everybody's talking about this fib retracement, which is true, right? And they're talking
The
you
fifty
take a
percent.
fib from the top to the bottom, right? I use 6.5 and 0.5. Um,
Yeah.
a lot of people, so you could use 618 too, but
Yeah.
so what's true here is that Fibonacci's technical stuff, it's all self-fulfilling prophecies, right? I'm going to take some of these lines off. Um, Meaning that there are multiple people looking at this and they don't typically sell on a 50% retracement. They call it's called like the golden zone, right? And that would be typically in here. So we have a 200-day kind of crossing right in here. So the 618 would actually bring us to 435. And if I did take an average week's range from today's open, my guess is, yep, this week from the open, 435, 436 is actually well within an average week's range. So if we do get up to this level, 437, up in here, that's where I'd be looking. Okay, I want to close my calls. I don't, and then I start looking for a new trade, if that makes sense. So if the indices, if SPY's up here, that's when you want to be cautious. That's when I'd start looking for some very short term protection, and you'll have this essentially this range. So that range, let's say if it goes very typical, would just be something like this. And honestly, this is very much what I would expect. As much as people wouldn't like it, it's just chop right in this range. And that's typical also of when you get to a 200-day moving average. If it does break, you might see some pretty violent pops to the upside that are quick but maybe short-lived. I always look at Tesla. It acts the same way. So whenever it gets, here you go, right? Going towards its 200-day, this red line is its 200. And it was just like SPY, kind of like downward sloping slightly. First tag, couldn't do it, pulls back, gets a little bit more momentum, tries again, higher low, sorry, presses, and then eventually it'll fail a little bit. And this chop right here is exactly what I would expect to see for the indices. So this week, to me, what that means is take profits quickly. We're a little bit extended to the upside. I don't see any major flushes coming. There's no fundamental reasons. Not until we get to Wednesday, which I didn't go here. So Wednesday we actually do. That's going to be our biggest data point of the week. So this is just a free calendar. And I'll just finish this off. So tomorrow we do get some building permits. And again, when we're looking at this stuff, the consensus number, there's a forecast number, but the consensus number is what actually matters. Building permits, since housing was a little bit of a deal last time, this might move a market. It usually doesn't, but we'll see. So building permits are more commercial level, and housing starts are residential. So that's really the difference there. And again, month over month numbers as well. The biggest day of the week is gonna be Wednesday. So what I can tell you for sure, no matter what, 100% of the time, FOMC minutes like this, and this is not a speech, it's just a release of the minutes. Minutes being the notes they took on the last FOMC meeting, will move markets. There's no question in anyone's mind whether or not it's going to move markets. Here's an example. Here we go. So here's an FOMC minutes release just recently on SPY, and this is again why do I mark these fundamental kind of events right here? Anticipation coming into it. They come out, the algorithms kind of scrape it, nothing bad, and then you're off to the races. If I go back to another one, sure. Oops, shoot, I hate that. FOMC minutes here, same thing. You'll have a reaction, kind of digestion, and then that creates a direction, and this created a pretty significant level right here that failed shortly thereafter. So the FOMC minute release will be one of those fundamental events that you want to take note of, whatever the price is trading at there. If it comes into that 435, you know, I wouldn't be surprised if it is somewhere around that level. Are we still going higher?
Yeah, Apple just triggered a 212 on the 15, but
Yeah.
it's a super tight candle.
Yeah. So, I
And
mean, that's, if we're trending up, again, average weeks range here. What's important to note also is that whenever anything moves the length of an average week within a 24 to 36-hour period, typically it's going to pull back. So that's with this 200 day, like right here, it looks like we're going to we could maybe make a break for it, and it would be something like that, right? Blow off toppy, whatever. But it's gonna be a rough ride. So what I would say is day trading will likely be your friend. Um, Taking profits when you see the momentum kind of die out, you can let them run, right? But I don't think this week is going to be swinging so much like it was last week. Last week was a really good um,
yeah,
week for swing trades. There will be some, but again, it's going to be mostly in those areas where you're finding some, stocks that have not bounced like this off the lows, that nothing changed with their fundamentals, and they just haven't gotten the love yet, right? Think of like a Disney that opened this morning like 120 something, right? We've been talking about that for a while. Intel also, like, not the greatest fan of the company, but technically speaking, there's nothing wrong with it. Here we go. Technically speaking. So Qs, again, same kind of situation. And we can take, what am I doing on a 3 minute? The same notes. And I believe it was right here. So Wednesday, no. Wednesday was the 10th. So I want to come to the 10th on each one of these. And that's going to give me a quick level. Looks like it's going to be right here. Yep. So CPI, not CPU. All right, CPI, same thing. Can we see? And this is right into this. I have this resistance point here. Q's significantly higher above that prior consolidation than SPY. But Q's 324. I'm going to tag this. I'll just make this actually a horizontal line to see if I can get any extra data points right there. So big pre-market move. They really never pulled back. Wow. This is the top of that exact consolidate. 324 and change on the Qs. I don't know what that would be in NQ, but that is absolutely your level. So same thing here. So if the Qs are not below 324 and change, they're just not going lower. It's just kind of what it is. It's not, personal biases aside, that's what it's telling you. So I'm not planning to put on any shorts until then. To the upside, very similar situation here. But for something like the Qs, I would probably come back down, and I think this will be a typical week's range. So anywhere around 325 for a bounce off of this consolidation high. I mean, that's pretty strong. Does this come back? Yeah. 324. And I'm just going to, this is typical, right? Just toggle through your time frames. See if you can get, yep. So a bunch of confluence like here, here, here. Big level. Yeah, 325, give or take, is going to be your major support. Well, acting like support here. All right, so that's what I have on the keys. Again, as we approach these 200 days, just be wary. Upside 345, which also brings us right to this same type of level. So could we hit that this week? We probably could, but would it hold that? The statistics would tell you no, it won't typically hold that. So let's say it chops like this. Statistically speaking, it wouldn't hold. And if it does move this much in a couple days, between now and Wednesday, expect a holding pattern from there. So that's where you really kind of just be like taking profits and looking for your next setup with your value areas being around 325. And above that, you'd want to see this break, retest, and then go. But looks like this week we're good for a move after breaking out of this. How long is this? So we sat here for a week, give or take. Yeah, and finally breaking out. I like this, dude. One I did want to take a look at. So diamonds similar. Actually, diamonds are getting through their 200-day right now. Wow, as we speak. So diamonds, sorry, these Dow Industrials. This would be like your Boeings and things like that. From the open here, so from the open, we've already moved 50% of an average week's range. That's pretty wild. So could it continue for the day? Sure, but would I expect it to continue tomorrow? It's coming near end quickly. These Mondays are just huge moves sometimes. So CPI here, same thing, 331 is my level. Right there. Oh, that's beautiful and matches up to that consolidation high. So the reason I'm doing this is, again, mentally, I want to have this level here. I also want to look for levels that I think it could bounce, right? So if this is now the low end of my trading range and an average week's range for me is a typical trading range. So that's when I need to kind of take some measured profits, things like that. We're not measuring larger moves or anything. Oh, you got a big old broadening range here. That could be good. So I want to get to crude also very quickly. IWM, before I get over there, just a note, same thing. I just got to mark these levels here. IWM has been probably the strongest of the larger ones. Look at this. Wednesday's move is way down here. 195. That was absolutely a critical level on IWM. Typically, this is kind of like your redheaded stepchild does what it wants. But we get a good trend when all four of these, are going in the same direction. Yeah, 195. Hitting this 200-day, so just be cautious. We'll see how these two, IWM over it already, and diamonds kind of coming through it as we speak. I would expect the Qs and SPY to do something similar. Yeah, CSX, cool. Last one, so to CSX, by the way, VIX, as long as VIX is under 24, debit spreads, volatility is low. This morning we had a big gap, so just be cautious when you do have an opening gap. The VIX doesn't really matter. It's on that specific underline. Your IV is very high, so be very cautious, meaning take profits early and quickly. Otherwise, even if you're getting the direction right, you might not make any money. Dixie. So Dixie's dollar index. This is important to watch too. So set 107 right here. 107. As long as it's under this 107, it's not really giving many cause for concern. Crude oil. This one. When I saw this morning, and I'm in some SLB, I'm in a good amount of OIH. Take it for what it is. This is a good example of, something that opens with this kind of a move. And when I saw this was like, crude has a typical, like a pretty big move. But that was I got to remeasure that. That was a huge move, opening gap from 91 to 87 and change. But it came right to this level where they were picking it up just before. So once I saw that, like, not flushing, and it definitely didn't retest that exact level and fail, I'm like, okay, it's coming back. Do I think it's going to come back all the way? No. So we were just saying that whenever there's a outsized move, larger than average move, and again, this is how these 200 days react to things, or how the stocks react to that 200 day. It's a big move. Should it recover? It might. I think it might. But when? I don't know, right? But what's for sure is it's not likely to do this kind of thing just yet, right? Not until it's well below this, right? Comes back, retests it, and does that. So do I want to have my stops sitting here? No, right? Typically, I'm actually looking to kind of pick off. This would be like, looks kind of like liquidity flushy. But that said, it's not, as long as it's over this 86.80 on crude futures. Let's say USO. Here's USO, the ETF that tracks this. Same kind of level. It's not going down right here. It's been defended multiple times. And this reminds me of Intel, which is very similar. Intel had this exact level well, not this exact level, but it had a here. That was level. Tried to test. They're stepping in. The first time, this used to fake me out a lot when I see these kind of things. Oh, it broke structure or it broke support. Um, maybe in my earlier years I would have like swung a short, but now it's like, no, most of the time, this kind of stuff, I got to see it come back and then I got to see it fail with strength. And if it's not failing with strength, this is not failing with strength. It fails here. This is a perfect example. That's not failing with strength. I'm not getting a new low, right? It wouldn't be until that prior day's first flush broke 34.40 would I say, okay, now it's going lower. But do I think that this is going to bounce all the way back and fill this entire fair value area? No, right? This is a massive move. And this is a perfect example of what happens, right? When you have that type of move, stocks kind of go in like a holding pattern. So expect that stuff. Don't shoot for the moon. Know that this creates a volatility suck where like things will start to come down, come in pretty heavily. So, all right, I'm going to take a look at some of these charts that you guys had. Oxy, I was in. That's easy. Potential gap fill. Don't want to speak too soon. Oh, we're close. CVX was one, and Roblox I know for sure. So I'll take a look at chat in a second. So Roblox first request. All right, so this red line, this is my typical analysis view. So I'm looking longer term on the weekly over here, right? Medium term on the daily right in here. I got an hourly chart. These bands on my screen, those are volatility bands, so I can know if the historic volatility is coming in or, is it a good time to buy options or is it better to sell options, and somewhat directional. What we can see for sure, right, is that on a daily chart, you have this pretty solid consolidation here that it has not broken above, not like the rest of the indices. I'm just going to take a fixed range. Oh, and the buyers aren't down here till I was not expecting that. Oh, that's because it was extended. I don't want to extend it. All right, so there it is. Just that little piece. I'm going to snag that line. So this is just where in this couple day range, right, where were most of the buys or sell? Where was most of the volume? Sorry. And it's right here, just over $50. And here, yeah, tried to press coming down. Let me see. Checking out Roblox. And oh, you guys. All right, cool. I like the large cap request. So right here, I don't see this unless, so just like with SPY, if it's not below said amount, right? I can't see it going down. With Roblox, if it's not below or not above, let's say 51.50, it's not going up. That's what I can see here. So do I want to play to the upside? No, right? That's when I could take it, because otherwise you have this downside probably at 45 is where this prior level is. But this one looks like it might be ahead of the game. So it would be potentially something to watch. If the other indices do get a pullback, they'll probably act something similar like this. So that's really? How much was this bounce off the bottom? 125%? Okay. That's wild. So downside, you have this. So my lines are automated on my charts. This is the last month's. Yellow is last month low. Cool. So for sure, if it goes below, here's a short trigger. Your short trigger 43.38. 43.38. That's your trigger short. And you would target 44.50 and then potentially 42.50 to the downside. Just taking this trade here, right? With stop has to be that prior high. That's what that would look like. Do I have confluence there? Yeah, so these bands, these lower end bands, downside volatility is increasing. Cool. This right here, 50. Let's see. It'd be tough. You're basically hitting a high value short area right at 49.60. Be very cautious. This would potentially be like the very, very beginning. Yeah. So low or high. Here, you're low. You haven't. The reason it's 48.15 is you haven't technically broken Friday's low yet. So once you break Friday's low, then you break structure. Otherwise, this kind of looks like choppiness. If it does break structure, I'd be looking for something like this, and then to take somewhere in here with your kind of value there. Cool. That's Roblox. CVX. CVX, very similar to Oxy. I mean, huge recovery. I had this entry long on CVX, right about where we are. Oh God, that would be even better. I really like this right there. If I get that, I don't think I'm gonna get that. We already got that. So for now, I'm gonna say as long as this is trending above 155, that's still uptrend. Here's the thing. So you have a break of structure for sure, right? At 140. Came back, retest 140 right in here, up off this 200, like upward sloping 200 day. We don't have a new low. Not really. I'm not even this 153 low. If it does break below 153 or trade below 152.86, then you could target to the downside maybe at most. Well, 149. And then your trade is done. But it kind of like played with you this morning if you were trying to do that. Here. Momentum still. So this is one situation where like buying calls that are longer dated. We'll see. I was thinking on my slob this morning to actually sell puts. So it doesn't mean that calls aren't going to pay you out here. Calls would really start paying you out if it does get back and fills this gap to 160. That would be a massive win on a short dated calls like option or even a debit spread. What I would say is that where the edge is on something like CVX here now is selling bull put spreads. So like selling like a 150, 140 kind of like bull put spread, saying it's basically it's not going to go down any further. But if it doesn't, again, it's a big move, right? If it doesn't completely run to the upside, then you're still going to make a good amount of money. Cool. Jesse took most of these: PayPal, Square, Amazon. So Amazon, we'll just hit this quickly. Amazon's tough level, right at that 200 day. I'm not going to be pressing a bet on Amazon here. It's really got to push through this 145. So maybe it could press through that 145. And I'll take this level here off of the daily. Actually, 153. Right in there. 150 to 153. That's where my trade's definitely over. If it does press through this 200 day, you're there. And then I'm hesitant to say sell calls here because again, VIX is so low. It's not really going to be a good thing. See how this is inside the middle of these volatility bands. This is what they are. It's like 1-2 standard deviation. This means that volatility is just getting sucked out of this whole thing. So like all day today, if you're in Amazon, if you're not sniping the bottoms of that, just from an IV perspective, looking at the charts, this looks like you're probably getting chopped up unless you're entering at this 141, selling at that 143, and just trading this basically smaller and smaller fair value levels. Cool. Yeah, the strat, I play daily levels on the strat. It's a double inside day so far. So the strat will tell you on Amazon, don't trade this. So, and it's the same thing as what I'm saying on this volatility stuff. It's a double inside day. Wait till it breaks one of these levels. Longer it stays in a double, in an inside after inside, the tighter that gets, but let it do its thing and then come back when it breaks. Square, same thing. Very much same thing. You got on this daily. Is that double inside? I don't know. Not really. But it's not really breaking. I gotta wait for 92 plus on Square. 76. You know what's interesting, level on square here, is if I were to get like a Wyckoff type, I won't get into that, setup, 8288 looks like a potential snipey level. Think 8288 would be snipey because it would be a higher low. Call it right in here, 83. So low, not, I guess this is this a higher high? No. Well, this thing is out of here. But if it goes into consolidation, this is, which is what this is, right? You just kind of expect a slow grind this way, right? And then something like this. You'll have a first, like they call fake out, and then like that. So I would wait till this 92 breaks, and then I'd be looking for an entry right around 88. But this is going to be something that looks like it's range bound for a little bit. Again, this is one of those things where, look, it's come off the highs or the lows quite a bit already. 50%. I'm not looking for that. I'm looking for stuff that is like this, where here is the lows. Consolidation lows. And this guy is really, it's a slow grind up to the upside in general. But if this, it already bounced. 65 is what I was looking for on this guy. Fixed volume. Right? 163.82. Something like that. And then I took this broadening range. So could it come back down and still hit this kind of like 160-ish level? For sure, it could. And then I would really just target, apologies for the lines. I would really just target here, up to there, 175. It's a really good option trade, though, if you get something like that. Yeah, around 160. Check. Do we do PayPal? Yes. Amazon? Yes. Roblox? Yes. MT9. All right, guys. I think that is it for now. I'll just do, yeah. Google. So this is one where I think actually I'm not selling any of this. I actually just finished building a position. But here's an example, right? So Google has been in this consolidation range. Look, this is what you're looking for. Once you do break your range, this is a 106-day range, 3+ months, give or take. That's just trying to start to break out. So it's breaking here, right? You'll have this first one. This might be a good trader. At some point in the future, it'll come back down a little bit. This is like your bigger entry, but this is more scalpy type setups. Good day trading setups. Google looks good, actually. Cool. I think we're good. All right, guys. That's it for me this week. If you have any stuff that you want to take a look at, you can always ping me on Twitter. It's like @papergames.com or @papergamesinc.com is the website. Which time frames do you look at for? So I typically daily, weekly, monthly, quarterly, yearly, depending on. It's always a multi time frame view. Google, we have some serious gaps on Google. We got a 140 gap and a 133 gap that have yet to be filled. So they're real, validated. I like Google of all the tech. Interesting. Cool. All right, guys. That's it for me. Have a good week. Again, hit us up wherever in the servers, Twitter, and I'll check you later.